Most people think investing automatically leads to wealth. But here's the harsh truth. Millions of investors are losing money every year, not because they don't invest, but because they're falling into hidden wealth traps. Let's break down the top 5 mistakes that quietly drain your portfolio and how to avoid them. One of the biggest wealth traps is chasing quick returns. People see a stock or crypto coin jump 20% and think they've missed the boat, so they buy in late, only to watch it crash. This mindset isn't investing, it's gambling with extra steps. The wealthy focus on long-term ownership, not short-term excitement. They know that real wealth compounds quietly, not explosively. Before you buy anything, ask, would I still want this investment if I couldn't sell it for 10 years? That one question separates investors from speculators. But even long-term investors fall into the next trap, one that feels responsible but secretly keeps you broke. We're told to diversify to reduce risk, and that's true, but overdoing it can be just as dangerous. Some people own so many funds, ETFs, or stocks that they end up mirroring the market, while paying extra fees for the illusion of control. Instead, focus on intentional diversification. A few strong, well-researched investments that complement each other. Too much diversification turns your portfolio into a soup of average returns. But even a perfect mix of investments won't help if you're making this next mistake that drains your growth from the inside. Every investor fears losing money, but few realize how much they're losing in fees and taxes. Management fees, trading fees, transaction costs, they sound small, but over decades, they can wipe out hundreds of thousands in potential growth. Even worse, many investors sell at the wrong time and trigger unnecessary capital gains taxes. The rich don't ignore taxes, they plan around them. Ask yourself, is my portfolio optimized for growth or just for convenience? Because even if your investments grow perfectly, the next mistake can still sabotage everything you've built. Too many people invest before building a financial safety net. When an emergency hits, they're forced to sell investments early, often at a loss, just to stay afloat. That's not building wealth, that's building stress. A smart investor treats cash flow as part of their strategy. It's not just about what you invest in, but when you can afford to invest. But even with perfect timing and cash flow, there's one last trap that keeps most investors stuck in the cycle of almost wealthy. The final and most dangerous trap? No plan. Without a roadmap, investors jump from trend to trend. Crypto this year, property next year, gold the next. They react to headlines instead of following a long-term strategy. Wealth doesn't come from constant action. It comes from consistent direction. A written plan turns your investments into a system. And the moment you have a system, you stop being controlled by the market. Now that you know about these mistakes, you can put yourself ahead of the average investor by working towards avoiding them. Because once you do, your investments stop keeping you broke and start working to make you free. Investing is just one part of how wealthy people make their money work for them. Check out this video here if you want to learn more about how the smart people handle their money every day.